Hello, my name is Michael Glass from emini-trading-coach.com, and we're going to go over a few disclosures before we begin our video. Any symbols that we use today should not be inferred as a trading recommendation. No matter what investment vehicle you choose, stocks, forex, futures, options, they all have a level of risk associated with them. You can lose your money, and you have to see if that matches up with who you are as a trader. Any backtesting we do is just to show the potential of a strategy. Future results are not guaranteed, and any investment decision you make is solely your own responsibility. Trade at your own risk. So let's go ahead and begin. We're going to look at our weekend wrap up here for November 20th, 2010. And we'll start off by looking at the key events from last week. And we can see that our three major indices basically ended flat for the week. However, that doesn't really tell the whole story. We know that there was a sharp drop on Tuesday, followed by a gain on Thursday to kind of pair off the two, offset the drop. Of our major sectors, five rose. Although again, it was very fractionally. None of them rose more than a percent, really a half percent. Some of the down moves of the week was caused by the China Shanghai Composite raising its banking reserve requirements, and so that caused a little bit of a dip this week. And the positive news of the week was GM's return to the stock market with this IPO that was priced in on Thursday after the close on Wednesday, and we had a nice move up on Thursday. It priced at 33, opened at a little above 35, gave a little bit back on Thursday, Friday also. There was really no economic news on the week that moved the market. As we look at what's coming up on this week, we know we have Thanksgiving, so we're not going to have a lot going on. There's no earnings this week that should move the market. No economic events for Monday. GDP estimate on Tuesday. FOMC minutes on Tuesday. Maybe if there's some verbiage, although again we already had quantitative easing to announce, so not really sure what the minutes will do. But if there was some verbiage in the minutes, that could move the market. And then you can see a bunch on Wednesday because the market is closed on Thursday and it's open half a day on Friday. So when we look at our key technical analysis points, we have the same resistance. We're still looking at the April swing high as our resistance. And as we look at support, we're looking at the May 12th swing high as support. We also saw the 200 simple moving average on the weekly chart at the support. And we dropped through the 20, so now the 50 moving average held up as support on that large move down. Our interest area is 1274, but that certainly has a ways to go. Since we moved off of the April swing high, really that's where we're looking at. So let's go ahead and pull the charts and take a look. Okay, so what we have here is a daily chart of the S&P 500. And you can get a visual of what we're referring to as far as our key technical analysis points. Again, when we look at resistance, this red dashed line here is the April swing high. And that's where we pushed up great, and then now we fell off of. So that is our resistance as we're potentially moving up higher. Our support, this yellow dashed line here. That is the May 12th swing high. So it did, you can see our wicks here basically came right down to it. And then this red moving average is the 50 exponential moving average. So again, there's our support as we broke through the 20 moving average on the daily chart. So now we're holding over the 50s. So really, our May 12th swing high and our April swing high. So we're kind of sandwiched in between there as we move back higher. You can see that we're right below the 10 moving average as we potentially can move higher. Now, our indicators on the daily, our MACD is a little bit overbought. It's coming back down. RSI was heading back down, started going back up towards the overbought level, and our stochastics we did get a buy signal and we're heading back up. So our daily indicators, our three musketeers here, are a little, still I would say a little bit overbought, saying that we need to pull back a little bit more, but we did get a pull back and that certainly did help. Now when we switch over to a weekly chart, and we will zoom this in for you. And you can see here our weekly charts are still overbought. Stochastic over the overbought sign, RSI up here hovering at the overbought, and MACD's heading up towards overbought. So our weekly charts are a little bit overbought here. You can see this orange line. We said support was a 200 moving average on the weekly charts. So there you can see it there. And everything else is basically the same on the weekly chart. Now we'll take a further look at the market with our monthly charts. And we can see the same thing, our April swing high. And what's also important on the monthly charts, you can see the 50 moving average on the monthly chart is holding up support, and that is certainly a psychological boost to the market to be above the 50 moving average. You can see that on our pullback here in July, the 200 moving average act as support. Our indicators still, we've been saying for a couple weeks that there's still room to go. I would say they are starting to get overbought on the monthly charts. Stochastics is almost there. RSI is getting up there. MACD is finally crossing over to the upside. So there's still a little more room, but I would, again, hesitate and be cautious. So our long-term time view, still a little more up move. Our daily, if it turns and swings back up and it confirms with the long term, then we have multi-time frame agreement, and we can go ahead and look for those trades to the long side. Okay, as we move on to the educational portion of our video, we're using the book Trade Your Way to Financial Freedom by Dr. Van Start. And we're on to the section where he begins to talk about the key parts of your trading system. Now, we just talked about expectancy of our last couple of videos. And now, each of our videos going forth are going to cover each of these 7 key components to a trading system. First is setups, and that's what we're all about at emini-trading-coach, developing high probability trading setups. And so you have to understand that a setup is that criteria, that list that you have, that when these things happen, there's a reaction, there's a trigger. That trigger usually is your entry technique. Once you're in the trade, you need to know how you're going to handle losses and profits, how you preserve your capital, cut your losses, let your winners run, and how you take profit on the other side. Both of those, loss and profits, affect your opportunity, your cost factors. If you're taking small profits, one big stop out can ruin all those profits. So understanding that and understanding how to use position sizing affects your profit and losses and your opportunity, your cost factors, all very important. And of course, your trader's toolbox. What platform are you using? What trading platform? What charting platform? What video instruction are you getting? What coaching are you getting? What subscriptions are you purchasing? All of that are part of your trading toolbox. And so going forth, we're going to put together videos on each of these components to your trading system as laid out by Dr. Van Start in Trade Your Way to Financial Freedom. So you know about our resources, and we're putting together more videos that you can find on Twitter, Facebook, and YouTube. Emini-Trading-Coach on Facebook and YouTube. Emini-Coach on Twitter. But as we begin, we want to make sure everybody knows that we just released our free 5-part video course on developing high probability trading setups. And those people who already watched it know that at the end of the 5th video, we give you a bonus. We gave you directions on how to get the 6th. There is a 6th bonus video on the actual first high probability trading setup that I use. So go ahead, sign up for our free 5-part video course, and that will give you an introduction to our actual paid course. No, we're not like other places charging $6,000, $4,000, $5,000, $3,000. It's very affordable because we believe that it's important that you have the structure, the basics of trading, the components of a trading plan, and then how to implement those trading setups. And once you get the videos, we're sure that you understand that it's not just enough to have the information. And what we do with our coaching system is take it to the next level. We personalize those setups to who you are as a trader. We personalize the system so that you are trading who you are and you're not just trading some black box system. You know about our relationship with Global Futures, 20 free trades, and they've got intraday mini margins low as $300. And of course, you got to prepare to trade. You got to be able to handle the pressure, the emotion, the pressure of trading. And the way you do that is by preparing before and after the market as hard as you do during the market. And you can do that through a great software for virtual trading. Because in the end, it doesn't make a difference if you purchase a new system, if you learn a new indicator. get access to a new room, or learn that high probability trading stuff in our free video course if at the end you don't pull the trigger. And that's what we are and what we do here at emini-trading-coach. We give you that psychological capital to pull the trigger. We develop a system for you, and we develop your confidence in that system. Thanks, guys, and I'll see you next time.